let's get down into the methodology. Let's dig into it a little deeper. Now that you have a little understanding, what I'm going to do is I'm going to erase every line, box, or anything that you see. Let's remove the drawing objects and let's remove everything. Okay, this is everything. Now everything's gone. You can't see anything. All right, it's just you and the charts. Just you and the charts. All right, here we go. Now, the futures market is an auction. It's an auction. There is a starting bid when you go to an auction. If you go to, I don't know, Sotheby's, or if you go to any other of these fantastic auction houses, what they do is say, ladies and gentlemen, coming to the stage is a new pair of AirPods, right? This is a new pair of AirPods. Well, they are not new, but they are gently used AirPods. And the starting price is $2.7 million, right? At that point, once he introduces the price, he just made an announcement of value, 2.7 million. That means the price is up here. Everybody in the audience knows what AirPods should cost, though, right? AirPods shouldn't be $2.7 million. Maybe you spend a couple $100 or so on the AirPods. So what does that mean? Will anybody participate and bid? Will they bid the price up? No, absolutely not. What you will see is the auctioneer will say 2.7, no, well, how about 2.2, 1.5, 100,000, 50,000, 10,000, 1,000, $500, 200, bid. I'll take it for two, Now you get people to participate as bidders. That's the market. See, I tell you, what trading is. All you're looking at is a conversation. The conversation goes like this between buyers and sellers. Hey, I'll buy that, or I won't. Or, hey, I'll sell that, or I won't. That is a conversation between the buyers and the sellers. And it goes on nonstop. In the bond market, it is 23 hours a day, 5 days a week. That means quite literally tonight at 6 p.m. till tomorrow at 5 p.m., we'll be having that same conversation between the buyers and the sellers. Trust me, they're always in the market and they're always having the conversation. The conversation, once again, is I'll buy that from you or I won't. And the sellers proclaim, I'll sell this to you or I won't. And because of that conversation, up and down the candles go. Up and down the candles go. Hey, I'll buy a 168.16 or I won't. Hey, I'll sell a 169.26 or I won't. You understand? Now you're saying that it is a pictorial reference or a pictorial description of a conversation that is always going on, one that we have affinity to, one that we've always seen. I'll prove it to you again. If you are in your house and you look to your left and to your right, you are in a neighborhood. Yes, you are. And someone, if you looked on Zillow or if you looked up on one of those housing places, they will esteem a value to your home and to your neighbor's home and to other homes. And you could go out driving looking for a home, and that home might be a beautiful home, wonderful home. All the windows and doors closed just right. All the AC blows, the water runs. Look, the electricity flows. Everything is just right. But if the price is wrong, you will say, I wouldn't ever buy that house because it's too high to buy. Guess what? You just became the third person in the market. So you have buyers and you have sellers, or you have a person waiting to become a buyer and seller. The beautiful thing about any market, the purpose of a market at all, the only purpose of a market is to facilitate trade. We facilitate. That's what market does. Markets facilitate trade. So if you're in the real estate market, can you imagine someone, if they know that in this zip code, every 3-2 house goes for around $150,000 to $170,000. They build a 3-2 house inside that zip code, and the starting bid is $1.7 million. Everyone will sit there. All of the participants will not buy because the seller is too high for the right price of the market. And that's all you're looking at. I want to let you know that this is common information. It is information that is common. Everyone is a trader. You've always been a trader. You have always been able to esteem or estimate value. You've always been able to place value. You've always been able to understand whether or not you should participate in the trade or not. You go to the grocery store, you want eggs, you're hungry, it's Saturday morning, your kids want eggs, the wife wants eggs, the spouse wants eggs, the girlfriend, the boyfriend, everybody wants eggs. You say, I have no eggs. I will go to the store and I will get eggs. You go to the store, you go to the dairy section, you pass up the yogurt, you pass up the cheese, and here you are standing in front of the eggs. You realize that all of the eggs are gone except for one kind of egg. Well, what kind of egg is there available for you? These eggs are $1,000 per dozen. And you immediately decide, I don't really want eggs that bad. Why? Because they are too high to buy. You decided to not participate. This is what it is to be in the market. This is the essence of the mastery method. The essence of it is first realizing that you've always been a trader. You are in this live right now because you are exchanging your time for my information. I am here to exchange with you. We are trading. When you're on social media and you're moving your thumbs back and forth, you're trading. When you stop at a post, that is saying this post is worth my time. The algorithm inside of the social media platform sees that you're willing to trade for this post, and the algorithm pumps it up just a little higher for people who are like you. Because everybody's a trader. You've always been one. Ever since the second grade lunchroom when you had peanut butter and jelly and somebody else had Doritos, so you shared your Doritos. They shared their Doritos and you shared your peanut butter and jelly, and y'all both had a great lunch. You've always been a trader. Always, always, always. Now let's apply it. Can I tell you, this platform is called Ninja Trader. You can visit ninjatrader.com right now and download that platform for free. And in fact, they'll even give you free data to trade on. Now, tell them I sent you, all right? Tell them I sent you. Do me a favor. You ready to learn a trade? I'll teach you a trade. Now that I've taught you about trading, I've taught you about the bond market, I want to teach you a trade. Can I give you a free high probability trade? Would you say, hey, Jay, teach me one? Just type, teach me that. Show me that, bro. Show me that. So somebody say, show me that. Show me that. Show me that, bro. Show me that. Show me. All right. I'm just going to randomly kind of go back. I don't want much. I'm just randomly going back. Okay. Random. All right, here we are. I see y'all in here. Damien in here. Hodges in here. Yakima, I see you. I see you. All right, let's get to it. Now, I'm going to show you how I look at the market. To me, the market looks like this. I'm going to put it online. Can I do it like this? It looks like this. It kind of, oh no, this is like give me the pencil one. Yeah, it kind of goes up and then down and then down and then kind of sideways and up a little bit and then over to the side, kind of up and then boop, it really popped up that time, and then kind of came down a little bit and was wiggly, squiggly, and then kind of up a little bit and down, and then whoop, it kind of went over and then popped up to the side, whoop, whoops, then down, shoot, whoop, then big down, up, whoops, then sideways, then up a little bit more, then kind of steppy down, like a gentleman, then up again, and sideways, then somebody hit it, and then came back up, then a big fight, squiggly line, came back up. And then it went up right here, and then down, big down, and then sideways like this, and then down, and then over there. That's how I see a market. And I really do make those sounds in my brain. That's how I see a market. Everybody see it? All it is people esteeming value, buyers or bulls, believing that the value of the asset should rise and pushing it higher. And sellers or bears, believing that the value of the asset should fall and pushing it lower. That is the conversation. All right. I want to draw your attention to something, though, that's very specific. When I'm looking at this chart, I see that this occurred. Can everyone see that when the price got there, for some reason, it drastically dropped? Like, whoo, I'm talking about, Lord, it dropped real big. It was like it was a big old drop right there. Whoops. All right. I will say to myself, the mastery method. The mastery method goes like this. Now listen to me. It's real, so it's crazy because I have studied Fibonacci, his retracements and extensions. I've studied Elliott waves. I've studied market profile. I've studied volume. I've studied momentum. I've studied candlestick patterns. I've studied price action. I've studied Hypothetical. I've studied Ichimoku and its dragons. I've studied a lot of different ways to look at a chart, a whole lot of ways, read a whole lot of books about it. And after studying all that stuff, I realized that I had one job as a trader. And I had but one job as an educator, only one. The job as an educator is not to be smart or make your students smart so that they can say smart things at the family reunion and everyone says, oh, look at them, they're so smart. No, my job is to make you as profitable as possible, as informed as possible so that you can make profitable trades in the market. That's your job. That's our job. We're traders. We don't count our intellect. We count our profit and loss. That's what we do. It's the harsh truth of the game that we play. The smartest man does not necessarily make the most money. It is the most proficient trader that does. So it is with that in mind that I was brought to a quote. The quote was by, what's the smart dude, man? He said this, man, I mean, just a brilliant scientist, and his name eludes me at this. Albert Einstein. He says anybody can make something complicated. It takes a genius to make it simple. Simplicity, to make it simple. Then I had to study one of my heroes, man. We all know my hero. Come on, we got to do it now. If we're going to talk about him, we got to do it just like him. Come on, what we got to do. You know Bruce. You know what Bruce would have said in this situation. Come on. Come on, you know Bruce would have did. Come on, let it out. Come on, one more time. Come on, do it at your house. I know you cool. I know you cool. Come on, do it. Come on, do it. Come on, you know what he do with it. Come on, man, that's Bruce. Bruce Lee had a fantastic thing that he did. He studied karate and he studied judo and he studied American boxing and he studied Chinese boxing and he studied fencing and he studied jujitsu and he studied all of these different methodologies of fighting, meeting the moment of combat. And he, after studying them all, he decided, he decided to say, you know what, I'll make my own method. We'll call it the Tao of Jeet Kune Do. It will be my methodology for helping the person that does not know anything about fighting meet the moment of combat with confidence and be comfortable when it comes down to altercation. So he wrote the book. It highlighted the virtues of the other methodologies, dismissed their vices, and maximized or amplified his best points. That was it. That's the Tao of Jeet Kune Do. And I said, Jay, you need to do that for your students. You need to do that for the community. Man, they shouldn't have to read all the books you read, Jay. They shouldn't have to study all the time you study, and they shouldn't fail as long as you fail, Jay. They shouldn't do it. They should have 3 simple questions to answer every day. And that's it. That's all I did. The mastery method is but 3 questions. If you can answer those 3 questions, you can be profitable. The questions are these. Where are the buyers? Where are the sellers? And who's going to win? Where are the buyers? Where are they? Where are the sellers? And who's going to win? Will the buyers win? Will the bulls win? Will the market rise? Will the bears win? Will the sellers win? Will the market fall? This is the thing that we have to answer. After you look at Ichimoku and his dragons, when you look at Fibonacci and his retracement and its extensions, when you look at Heikin-Ashi, when you look at all of these different methodologies, Elliott waves, and when you look at price action, and when you look at candlestick patterns, it is but asking these questions. Please answer me. Who will win? Will the buyers or the sellers win? And in fact, where are they? Where are they? Where are they? I look at this chart and I see for myself that at some point the sellers had enough. I'm going to tell you where it was. It was right here. It was at 173.21 that the sellers decided that they weren't going to let the buyers go up anymore. In fact, what they were going to do, they were going to push them down big time. They weren't going to play no games with those guys. They said, we had enough of you. You can start going down now. Can everybody agree that that's what you see? Type a Y in the chat box if you can see that the market rose, and then once it got to that green line, by God, it fell. By God, it fell. If that is then true, what I will say is, hey, I found some sellers. I found them. Hey, I found them. I was looking all over the market and I found them at 173.21. That's where the sellers are. Now, let me tell you a story. Let me tell you a story. The beautiful part about the story is this. The part about the mastery method is just simply understanding that we get our information by doing what a kid did for another young lady from Houston, Neo, who's a fantastic songwriter and singer himself, actor, triple threat, if I must say. The boy is talented. He was sitting and he was watching his aunt argue at the time. His aunt was arguing with what would have been his uncle. And she told him, you can get out of here. In fact, get your stuff and go. So the guy goes to grab his stuff and she says, it ain't, not that one. It's that box on the left. The one on the left. Get that one and go. He says, oh my God, I got to go to a studio. He goes to a studio and he writes, to the left, everything you own in a box to the left. Beyonce would be great for this song. He thinks for himself, man, she'd be great for this one. He sends it over to B. B, you know what B does to records. I'm just going to tell you what she does to records. She kills them. That's what she does. She grabbed the record from Neo and said, to the left, everything you own in the box to the left, everything you own in the box to the. I'm talking about she started killing the record. She killed it so bad that the whole world started singing the record. But I'm going to tell you, Neo wrote it. Beyonce sang it. But Jay traded it. If we are to be good traders, we must look to the left. If you are experiencing any freeze, just hit restore. Just hit restore on your browser. Your browser could get a little tired of what I'm saying because I know what we're doing. We out here changing lives. So if your browser gets tired, just refresh. Come on back. Jay's right here. Jay's right here. Look here. You just have to look to your left. The left is important. We look to the left. Neo wrote it. Beyonce sang it. Jay traded it. What we have to do is look to the left. Why? Because we let the past inform the present, so that we can predict the future with a high probability. That is our job. That is what we must do. Okay. So we found these sellers. The sellers are at 173.21. I will wait. Because I have found sellers, I am willing to wait. Oh, but something magical happens. Now, on December the 17th at 11 a.m., the sellers stepped in. However, here we are on this beautiful, wonderful day, December 21st, and it is 6 a.m. Can we say that our green line was hit? Does everyone see that price came to our green line? Type a Y in the chat box if you see that price came to that line. Because it came to that line, we know because we looked left, we listened to Neo and Beyonce and Jay, and what we did was we let the past inform the present so that we can make a high probability assertion about future activity. When we looked left, we found sellers. When our price came out again, we became a seller. We hit sell. Now, selling is important. I know you all are learning so much about it these days. But selling is important because you can be profitable as the market falls. You sell, which means that you earn money as the market goes down. So what happens to this market, Jay, as it travels? Well, it goes down and down. Now, don't think of me as a magician. I am not doing anything that is spectacular. Quite simply, anybody in the world can look left. You can look left. Everybody can look left. And in fact, tomorrow when you wake up in the morning, pull up a chart and just look to the left. You can be very profitable that way. Now, that's a high probability trade. Let me teach you about the bonds, though. The reason why I love them so much, why they're my favorite future. Oh, it's my favorite future. Let's just say you got in here at 173.21. You became a seller. Let's just say you became a seller there. Let's just say you didn't get the whole trade. You didn't get the whole trade. You only got short to there. You didn't get the whole move. No, you didn't stay to 172.12. In fact, your dog started barking. You had to go to pick up your mama. You know what I'm saying? Your kids needed help with some of their COVID homework because all the kids are in the house these days. I don't know if the world will ever open back up. I pray. But everybody, you didn't hold it. You got out at 173.11. You traded from 173.21 to 173.11. That was your trade. Somebody help me, because 21 minus 11, somebody help me with that. 21 minus 11. I'm going to pull up my calculator because I'm not quite that sharp. 21 minus 11. Did anybody else get 10? I got 10. 21 minus 11 is 10. That means that you caught a 10-tick trade. The trade went 10 ticks. Okay, well, I told you before that this is the highest valued instrument in the entire market. It is valued at $31.25 per tick. Okay, so what I would have to do is I would have to say I caught 10 ticks, but what does that mean in money? So I would have to multiply 10 times $31.25. And what you see is that by looking left, by listening to a pop record and listening to a guy from Miami, that's $312.50. But this is where the game gets fun. Let me stop my share because I want to talk directly to you. I'm going to stop my share. I'm going to turn off this whiteboard. Hey, y'all, it's me. This is where the game gets fun. $31.25 per tick goes 10 ticks. You make $312.50. Now that's good enough. However, that is per contract that you trade. Let me tell you about this old brokerage, this old bank I know. I know a bank called Ninja Trader Brokerage. Yeah. If you put $500 in the brokerage, they will allow you to trade one contract. If you put $1,000 in the brokerage, they will let you trade two contracts. Now, why are they letting you trade contracts? Well, your account balance determines how many contracts Ninja Trader will allow you to trade in any particular trading scenario. They charge $500 per contract. It's the best price I've ever seen. I've never seen a better price for futures trading. Okay, just letting you know. So if you go over there, tell them Jay sent you. Never, ever, ever have I seen a better price. Here's what's beautiful. You want to be a 3-contract trader? 500 times 3 is 1,500. You would need to have a brokerage account balance of $1,500 or more to trade 3 contracts, right? Now, that answers that question for you. Well, Jay, how much to start? How much to start? Well, it all depends on how you wish to start. First, start with your education. Second, I would say go to ninjatrader.com and fill your brokerage account up with whatever you deem possible, and then get to starting. That's how it goes.